On today's First Time Buyer channel, I want to talk to you about FHA financing so you can learn everything you need to know about this type of loan. Welcome back, Enrique here with First West Financial, and this is my corner that I call the First Time Buyer channel, where I get to talk to you about everything that is finance related, everything that is buying a home related, whether it's real estate or whether it's mortgages. We talk about a lot of different topics. Our goal is to educate people and empower people to learn how to purchase a home and be smart about it. And we're going to talk about a topic that is really hot right now, and it has to do with FHA financing. Everybody's talking about FHA, except a lot of people don't even know what that means. They don't know anything about it. So today, you're going to walk out of here educated about FHA financing and how it works. FHA financing is alive and well, and it's been alive and well for many years. I talked to someone the other day and said, hey, I bought a home FHA. My parents bought a home FHA. My grandparents bought 2 houses FHA back in the 1950s. So this is a program that has been around for a long time. It is sponsored by HUD, Housing and Urban Development. And the program itself can be a little deceiving. A lot of people think it's a government program. That means the government is giving you money to buy the house. That is not correct. FHA is about purchasing a home with a guarantee that the government will issue in case the loan was to default. That's what FHA means. In other words, it has something called FHA mortgage insurance. So the bank gives you the money and the government insures the loan. So that way the investor can feel confident lending the money to someone who may not have perfect credit and a small down payment and still do it. So why FHA? Why does it exist? Well, if it wasn't for programs like FHA, the banks would require a big chunk of down payment, 20, 25, 30%. So if you're buying a home for $400,000 and FHA didn't exist, perhaps you would need $80 or $90 or $100,000 to buy the home. Well, a lot of people don't have that, especially first-time buyers. So FHA, through HUD, created a program that says, look, Mr. Lender, lend the money to the buyer with a small down payment, 3.5%. 3.5% down payment, you buy the house, and if something goes wrong, HUD will back it up. Now, there's an insurance policy that has to be purchased. That insurance policy is paid by the buyer. We call that FHA mortgage insurance, MIP, private mortgage insurance. A lot of people call it different things, but it's basically mortgage insurance, and it goes attached to the loan until you either refinance it or you sell the house. So that's the trick, is that the bank is insured by HUD, but the buyer is the one that's paying for the policy of the premium. It's very similar as if you have a vehicle. You have insurance. Somebody steals the car or it burns or something happens to it. The lender doesn't lose any money because the insurance company pays off the claim. The same thing happens with FHA. Is FHA for first-time buyers? Yes. Do you have to be a first-time buyer? No. So that's the first question. Do I have to be a first-time buyer to use an FHA financing? The answer is no. Number 2, what if I already had an FHA? Can I get another one? The answer is maybe. If you paid off that loan and it went well, you didn't have a default, you didn't have a short sale or foreclosure, yes, you can go and apply for a new loan with FHA. If you already have a house that is financed with FHA, in some cases you can get another one, in some cases you don't. You have to speak to a mortgage professional that will explain to you what are the requirements. So for example, somebody has a house in Alabama and it's FHA and they get transferred over to California. They may be in a position where they can get an FHA loan in California because the job transferred them, right? Let's say that they have a house with FHA, but the house is rented out. They rented it out a long time ago. They live in it for a while. They rented it out. Now they want to buy a home FHA. In many cases, that's possible as well. Every case is different, but there's no black and white where people say, oh, no, you cannot have an FHA loan because you already had one. That's not true. Or, oh, you already have a house with FHA, you cannot get another one. That's not necessarily true. Find out from a mortgage professional whether you qualify for another FHA or not. Is there a limit for your FHA financing? Yes, there is a limit for FHA financing. Right here on the left, I'm actually going to put the limit for the county where I live, which is Riverside County. I'm also going to put the loan limit for San Diego and Los Angeles County and San Bernardino County. So just to give you an idea, what is the most amount of money you can borrow FHA in those counties. I'm going to put it right here on the left, so that way you know that there is a limit as to how much you can borrow. Why do they put a limit? Well, we don't know. I guess they don't want you to buy $1 million home with FHA financing. They want you to buy affordable housing with that program. So that's understandable. Those limits change all the time, usually at the beginning of the year. They usually go up, and that's actually a benefit because the higher they go, the more people we can help. So what are the requirements? Do you have to have perfect credit? How much down payment do you need? Let's unpack it. Number one, when it comes to credit, you don't have to have perfect credit. FHA allows you to purchase a home in many cases, even with a bankruptcy, a foreclosure that just happened a few years ago. I have people that had a bankruptcy a couple years ago, 3 years ago, and they can buy a home FHA. I have people that had a foreclosure 4 years ago. They can buy a house with FHA. A short sale, same thing. Usually, we like to see people with a 620 or better. We can go lower in some cases, but not always. So we go down to 580 in many cases, but it's really hard to finance people with a 580. It's doable. 620, that's when it gets a little easier. 640 is better. 680 is phenomenal. 700, great. 740, you're going to get a great rate on top of it. Now, one of the advantages of FHA, they don't penalize you a lot for having low scores. The difference between having a 640 and a 740 is very little when it comes to rate. So people who don't have amazing solid credit, they can still get a phenomenal rate. So right here on the left, we're going to put a graphic that shows you that 620 is ideal, 680 is better, 700 is phenomenal, and 740, of course, that's golden. So those are sort of the numbers that we want to look for. The second thing that we want to tell you is you do need a down payment in most cases. So how much down payment do we need? We need 3.5%. 3.5% of the purchase price is the minimum requirement. Where does the money have to come from? Well, as you will see here, we have several sources. Number one, it can be your own money. As long as it comes from your savings, your checking, it's money that you have saved, you can use that. Number two, a gift from a relative or an interested party. So your mom wants to gift you a certain amount of money. There are some rules, so make sure you talk to your mortgage broker, but the rules are very easy to follow. And yes, you can get a gift from a relative. From your employer, that's right, your employer can actually gift you the money for the down payment on your house. And of course, you can also get money from your retirement. In some cases, 401ks. You can even borrow the money from your 401k or your retirement plan. There are some retirement plans that will not let you withdraw money, but if they allow you to it, you can use that for down payment. 3.5%. Now, there are some other expenses involved in FHA, so you have your closing costs. Closing costs is going to be things like your escrow, your title, your appraisal. So talk to your real estate professional and your mortgage lender about specifically how much closing cost money do I need, right? Who can pay for the closing costs? Well, you can pay for the closing costs, or the seller can also contribute for some of those closing costs in some cases. So that's another thing you want to be also aware of, is that there are some flexibility when it comes to the closing costs. Closing costs is an area that a lot of people overlook. They completely forget that, I got the down payment. And then they go into escrow and realize, wait, I don't have the money for the closing costs. So you're scrambling trying to get a gift for $6,000 or $7,000 for closing costs. So make sure that you get that information correctly. Now, one of the great advantages of FHA, like I mentioned before, is that you don't have to be perfect. Imagine you have a 640 FICO. You have a gift of $4,000 from your parents. You don't have any reserves, and you can still get approved for a loan to purchase a home with practically no money down. That's the beauty of FHA. FHA has extremely, extremely flexible underwriting. Here's another advantage of FHA. FHA also allows for someone who's not going to live in the house to become a co-borrower to qualify. So let's say we have a young couple that has a few student loans, maybe they're making money, but they still need a little bit more income to qualify. And the parents say, hey, we're going to co-sign for them, we're going to help them. FHA allows that. So non-occupant borrowers that are not going to live in the home can actually be a part of that. They have to go through the qualification process, but that's one of the beauties of FHA. I personally think that if there was a perfect loan, FHA would come pretty close to it, especially for first-time buyers, because the flexibility in down payment, the flexibility in scores, the flexibility in credit history, bankruptcies, short sales, no problem. There's a lot of pluses. Very little down and very little closing costs, and a lot of opportunities to be able to get into FHA. There are dozens and dozens of pages of rules that I have to follow when I do an FHA loan. But a lot of those rules are actually very positive that allow people to purchase a home. I'm going to give you an example. I had a gentleman who's been in school for 2 years. Well, more than 2 years, but for the last 2 years he's been in school. So he graduated as a teacher, went and got a job as a teacher, and within a month was able to purchase a home because FHA allows to count the employment history as the school. The school is going to be the employment history. So even though this person did not have a full 2 years of employment, just the fact that he had a diploma and a transcript and a salary, we were able to qualify him with only 1 month on the job as a teacher. So that's the phenomenal thing about FHA, tons of flexibility. If you want to find out more about it, comment below. You have specific questions, you can let us know. We'll definitely get back to you. You can also reach out to us, send us a message. We're always here to help. FHA is a phenomenal opportunity for buyers. We want you to learn more about it, but we also want you to comment. Don't forget to hit subscribe. Don't forget to go check out the rest of our videos. I hope you have a great week. Talk to you soon.